Welcome to our webinar, Target Trading Academy. My name is Drew. I'm one of the senior managers here in charge of enrollment. We've got a great topic, in my opinion, today. It's very timely, especially with all the chaos, what seems to be chaos on what to buy, when to buy it. Are you in the right trade? Are you in the wrong trade? I get tons of phone calls from people that are really frustrated with the mess of information out there that is playing havoc on their profits. And the topic for today is, you're trading a business or are you just gambling? I've got two great speakers today. They're the founders of this company, Target Trading Academy. I've got Dan O'Brien. I've also got Patrick Assalone. I'll go over their background specifically here. But welcome. We are going to cover all your questions. Go ahead and write down any questions you have. It tends to be a little hard to respond to questions as they come up. It's better to just wait until the end. We also have a great promotion for only attendees in this webinar. So stay till the very end. We'll answer your questions. And again, we have a great promotion, something we've never offered except for people in this webinar. So without further ado, I think the first thing I want to cover is, why Target Trading Academy? What's our background? Why should you choose us if you do decide to trade or turn your trading into a business, a profitable business? Why choose us? Number one, that's all we do. That's all we do is day trading, futures specifically. It's something that a lot of companies and people can't say. Our founders are traders from the Chicago Board of Trade, true professionals that come from these markets and have done this for a living. Both of them each have over 15 years of training people professionally worldwide. Thousands and thousands of people have come to them over the years to learn how to trade professionally. I know they personally helped my clients over the years. I've been working with both Dan and Patrick for going on 10 years now, and they have helped out hundreds of my personal clients move from turning their trading into a hobby / gambling and into a business. I think the biggest thing you have to do when looking at trading is understand what differentiates trading into a profitable empire and into a loss leader, if you will, or gambling. Well, first thing you have to understand is if you're going to look at trading, you need to look at it like a business. You need systematic, repeatable processes that you can reproduce, right? Decisions by design, and then also you should have predetermination to the answers of things that come up, because I love the old saying, right? Everyone's prepared for a good fight until someone gets punched in the face, right? So you have to be prepared when you get punched in the face, so that it's not a surprise for you when something doesn't go your way. And then everything that you do needs to have an analysis behind it, both risk and reward. Now, gambling obviously is just the opposite of that. You tend to be emotional in your response, impulsive, you react versus respond, and there is no risk analysis. Everyone talks about their gut feeling. I was talking to one of our managers here today, and we're talking about this topic, and I said, if you're getting upset after you take a trade, right? If you get genuinely angry from a bad trade, you're probably not trading like it's a business. You're probably gambling, because you should have predetermined reactions to when things don't go your way. So it shouldn't be a surprise. And same thing, you shouldn't get over exuberant when you make a profit, because things, when they go well, they should be predetermined that they're going to go well. And I think when you take that emotion out of it, you're going to find that you're going to have a lot more enjoyment from your trading experience than if you're just gambling. Now, we're bringing up this topic especially. I do about 100 to 150 presentations a month from people all over the world. I get to talk to every walk of life, every different level of experience. And especially lately, I've heard more and more people want to jump into the markets to make a quick buck. And they bring up all the latest craze in terms of stocks to buy or other instruments like Bitcoin. You've obviously heard about the Reddit trades. Now they're on pot stocks. Just before that was GameStop. I've got a chart. I'm not going to bring it up here. You can pull it up yourself. Just pull up GameStop since the beginning of this year. And you can look at the days that the news events happened where everyone started talking about GameStop. And there was a big news event on Reddit where the Reddit readers, if you will, or subscribers, started talking about GameStop and doing the short squeeze trade on the 25th. And most people that got in on that day got in at about $100, $120 to be exact. Well, the next day it went down to $60. And then the mainstream media took the story of GameStop. So, every news channel had it going on. Every news channel had that, the GameStop Reddit trade, was advertised on every major news channel. And that was at about the $200, $300 range where I would say almost everybody got in. And guess what? Within 2 days, it was back down to 120. And the last stop, and I even have people I've talked to recently that told me it's kind of like the diehard traders on the GameStop trade, told me as recent as about a week or so ago that they were in at the $200 range going at the end of last month, and they were in it for the long haul, they told me. It's at $50 a share right now. So I think, again, this is the timely topic of, looking at your trading as a business and not as gambling. And the very first thing I think you need to do is not follow the crowds. And I can't think of a better person to talk about not following the crowds than our first speaker tonight, Patrick Assalone. Most people, when they get in the markets, if the market is saying buy, in my opinion, I think you should be selling, and vice versa. If everyone's telling you, if the major news media is telling you that you should be selling, you probably should be buying. And Patrick Assalone has been following these markets, trading these markets, and using market profile to do what's called the reversal trade. And I love the reversal trade because it is a systematic and repeatable process that Patrick has been using himself and teaching for over 15 years to do that kind of opposite thing everyone else is doing. And he's got so many success stories of students that use this technique that he teaches on, but also he gives the information the night before the market opens. So I hope you understand how profound that is, that you can actually know what to do the night before if the market hits certain levels. So if it hits this price, sell now. If it hits this price, buy now, and know the night before. He's a genius trader. Again, one of the founders of this company, a great friend. Without further ado, Patrick Assalone.
Drew, thank you very much. I'm going to take over the screen right now, and I'm going to go through a couple of things that Drew was speaking of. And you may not be aware of these things. Don't feel bad. Most people are not. First and foremost, let's look at that. Just because he brought it up, let's look at that GameStop tinny, where last week everybody and their mother said a bunch of Reddit people forced the stock down. That's an absolute lie. Big money moves the market. Size matters. It was in the 200s, 300s, 500s last week. The week before, it's at $50. Some genius last week said the short squeeze is on. It's going to 1,000. He said that when it was at 100. So if it's at 1,000, why is it at 50 now? So give me the date and the time so I know exactly when to buy. Another joker. Now, something that Drew was alluding to earlier. The method I've developed over the last 15 years, with a lot of help from my partner Dan O'Brien, is the market profile method. I am the only person in this industry who calls the levels out the session before. This is our website. I give the times the session before. February 2nd, 2021, these markets, 4:41 p.m. Eastern Standard Time to be used that evening, the next morning, and the entire next business day. No one in the business does this. I am the only person that does this. Drew was speaking about not doing what the crowd is doing. That's called the herd. The herd is always wrong and they're always late. It's a fact. If you cannot read participation, meaning what the big money is doing, the BlackRocks, the Goldman Sachses, the JP Morgans of the world, you don't have a chance. I'm not looking to go against them. I'm looking to go with them. Now, I'm going to show a couple of trades. I was generally only going to show one today, but I'm going to show another, one being very similar to my partner Dan. He's going to show an opening range gap fill. I have a slightly similar technique. We just use different ways of doing it. Neither is any better than the other. We're just using two separate sets of data. I would say Dan is probably a whole hell of a lot more successful than I am at this particular entry. But let's go to it. Don't believe a word I'm telling you. I'm going to show you actual clients submitting every single thing they must do according to my rules-based system. It is either there or it is not. So this morning, this is one of my clients, Nancy, who took an opening range fill on the S&P 500. $225 live, real money. This is David. Same exact entry. How do two different people do the same exact thing? Because they're trained to do it. I don't do it for them. I train them to do it. It's either there or it is not. Would you say that this is valuable if you know where the best place to get in is the day before? Nobody else in this business that does this. I've challenged people for $50,000 to trade against me. No one has ever taken my challenge. And they won't take my challenge because I demand we do it live in front of their students and mine. They won't do it. These are just a couple of the entries that I called out yesterday afternoon. Another live entry, real money. This would be a reversal long that I called out yesterday in Nat Gas. This is rich. Live, off of a high volume area, using my proprietary market profile method. Live, real account. That's how that works. That's real money. This is Gary, another client, short on the sim in the NASDAQ. Called out yesterday afternoon. I can go on and on and on. Patrick, live, real money on the micro, up 45. I can do this all day long, every single day. All of these people in bold, those are all winning, losing, mostly winning trades. Roman, live. Micro, ES, up $78.50. This is Bill, using our automated software method. Using our automated software. Winner. Loser, winner. At that point, up 400 on the sim, using my high volume areas called out the day before. The reason we do this is because we know the market moves sideways roughly 80 to 85% of the time. We know where the big money is. We are waiting for price to get there so we can execute signals in the direction of that trend. If it's not in the direction of the trend, we use our money management tool. How many contracts do we take? If we're up X amount that day, how much can we risk? Or do we risk anything at all and do we go home with our profits? No one else in the business does what we do. How do I determine these things? I use a market profile chart. What does a market profile chart look like? It is the only chart in this business that identifies participation or volume vertically and horizontally. You can see where the big money participants are. When you know where they are, all you need to do is wait and qualify your entry signal. You're not running around like a chicken with your head cut off, guessing it's some news report that's always wrong, because if it's on television or it's in the news, the play is over. Somebody is selling you their book of business because they're done with the trade. That's the way it works. This doesn't happen in futures. Futures is a zero-sum game. The clearinghouse matches every buyer for every seller for every buyer. It is the absolute best place, in my opinion, the only place that you should trade and have a fair shake at becoming successful. Again, I am the only person in this business that calls these levels out the session before. If you'd like more information on how you can learn to do this, at the end of the webinar, Drew will present you with that information. Right now, I would like to go on to my partner, Dan O'Brien, to show you something pretty spectacular that most people don't seem to understand about futures. So Dan O'Brien, please take over.
All right, everybody. So in a moment here, I'm going to switch to my charts the way Patrick did, and I'm going to talk about a gap fill reversal. And why don't I just do that right now? Let me jump to my charts. All right, so this happened on going back just last week on February 5th. Now the blue lines, they represent something about market profile. It's the value area of the prior day, but that's not really part of this discussion, just in case some of you are wondering. The pink line is the close of that day. Well, excuse me, it looks like we might have a problem here with reconnection. One moment. Okay, bringing it back up again. I know the issue. One moment. All right, folks, so I got my charts up. How do they look? Hope they're not coming in and out. They should look pretty good right now. Okay, so let me just describe what we see here on the screen. The vertical lines here are the close of the prior day, and so this is just a 10-minute candlestick chart, and it's showing us where the market was on the 4th of February. Now there's no overnight trades on this chart, and that's the only way you can see where the gap is, because the gap means we're taking out the overnight trades, and if there is an open in the morning higher, like we see here, or an open much lower, that the difference would be, of course, the gap. Said another way, when you wake up and have a cup of coffee and you're watching CNBC and the market isn't open yet, and they say, well, the Dow should open up 200 points this morning. Well, how that happened was there was trades done on the futures market, and they drove the prices higher. And then when it does open for the day session at 9:30 Eastern, that the difference again would be the gap. So here's the close on the 4th of February, and here's the open on the 5th, and we can see that there was quite a large gap here. And one of two things often happen. The market will open at this higher price, trade sideways for a while, and it's so bullish, and I say bullish because the market did gap higher, and it's so bullish that it balances a bit and then keeps going. The other thing that happens often is it opens up and people say to themselves, wow, it's at such a high price in such a short period of time, maybe I should take some profits. Well, by taking profits, you have to sell, and then that drives the market lower. And then there's another group of traders who are looking at this last price, the prior day, the close, signified by the hot pink line here. And if it gets there and the market isn't falling apart, they tend to buy it like crazy because at that point it's on sale. As long as there's no new news that comes out that radically changes everything and it drops dramatically, then these traders, they say, okay, it was up big time overnight and it's gone down to where everyone felt like it was a fair closing price. I'd rather buy it on sale down here than buy it at what they consider an overpriced level, which is right after the open. And so that's the overall idea. And so when you have that gap and it starts to trade down to this level, you can be a gap trader, a gap fill trader, and there's plenty of them, not only in the futures market, but on Wall Street as well. Some of them only trade these, and that's it, exclusively. And so there can be a lot of big trading at these levels like we see here. Now, what I don't like to do is to just go ahead and buy right at that level. It may stop a little bit before it. It may trade through that line a little bit, and then when the market turns around, if it turns around, that's when I like to go long. So that would be a little strategy behind a gap fill level, and that's where the other two charts come in. So this bar here, this red candle, is the 1020 bar, and then that's the end of the 1020 bar, and this green candle opens at 1020 and takes off. So at this level, and we're discussing this in the room, we are considering a buy down here, provided that the algorithms that I use in my room were saying that it was appropriate that the market, the probability of it continuing lower was very low, and therefore our chances of a reversal were high. And so let's see how that played out. So again, this is just last week. This shaded area here on the left is the area here on the bottom where my trending algorithm is in the no trend zone. Down in the red doesn't mean it's going down. It simply means that if you're a trend trader, you got to be very careful and don't really do anything if you like trends. When it crosses the white line and it's going up into the green, that tells us we should have a trend in place and which way the price is going. Well, they're going up, and we were expecting a reversal anyways. Similar to Patrick's method, when it gets down to one of his HVA edges, high volume area edges, he's expecting, if it's a support level, of course, he's expecting it to reverse. If it's a resistance level, him and his clients are expecting it to reverse down. So this gap level here, we were expecting, of course, for it to go up. So one of our indicators that we're looking for is telling us that it should be going up. It should be trending, and the price is going up. But what really was the key, even before that, is that this is a high-frequency trading algo. And they were at 75% bullish here, 80% back here, drops a little bit, and then gets back up to the 75%, and then up to almost 90% as, and I'll go back a moment, as we were looking for a reversal here. Okay, so I could have just bought it somewhere in here and hoped that it would turn around. Excuse me, that would be gambling. We don't want to gamble. So we want to put the odds in our favor, kind of like counting cards. Only you're using methodologies that work to take the gambling out of it. Same here. So this is the danger zone, that there's no trend, so don't just buy it. And then our indicators tell us that, yes, the market should be turning up and turning up nicely. And so then the last thing we're going to look at is, well, what is the exact price? Now, there's some things in here that we could talk about, but I don't want to get too bogged down into details. But then the volume chart that we use, and it's in the trading room every day, will show us where those buyers are at the exact price. Remember, back here, It was in that pink shaded zone where there's no trend and they may be fighting back and forth. But where these arrows are is where, go back one more time, is where the trending indicator said, yep, here's we're going to start trending at 1023, 1024, and the HFT high frequency traders were not only already on the buy side, now they're accelerating. Again, 1023, 1024, and now we're reading the tape and we see there's buyers at 1023 and 1024 is where they really come out. At any one of these prices, we see this particular chart in the room every day, and this is where the rubber would meet the road. So we have an overall idea of a gap fill. We see it right when the market opens, and if the market trades down there, then we're going to look at the algorithms in the trading room and see how they've developed. And as you just saw, that everything was showing be cautious, and then, okay, here they come, that according to the mathematics and the algos, it was turning, and we were able to enter this trade around 38.71. Really, not at the absolute bottom. Again, that part would be maybe a little bit of gambling unless you had Patrick's level at the same price. This is just a gap fill, and things turned around and went up beautifully. Now, there was another gap open today. I don't have a chart for it, and I'm not going to pull up today's chart, but there was a gap open higher today, and when it came down to that fill area, the gap fill level, I was talking about it in the trading room today and said, we got to wait for this thing to turn like last week on the 5th here, and it didn't happen. If it breaks through that level and flushes out, we need to let it go. Well, none of the algorithms lined up. And if you're reading the tape here on this chart that you see now, it would have been all red, selling, selling, selling. So we didn't buy it just because it was a gap fill. Nothing lined up on the algorithm side or reading the tape, and we let it go and it plummeted. Okay, so 2 examples there. One of them, it was a perfect setup here, and everything agreed mathematically, and then when it didn't, we just let it slide. So that's how we try and use these programs that we've been using for a long time to put the odds in our favor. Again, taking the gambling out where you just guess at it and say, well, I kind of like the way that looks and I'm just going to buy it. Well, you could do that, but we don't recommend it. We want to put the odds in your favor, and this is a great example of how we do just that.
Thanks so much, Dan, and also Patrick. I hope you guys realize that what we just showed you with Patrick is that the market will act a certain way at certain price and volume levels. There's actual spaces in the market that we know more often than not the market will react this way when it hit these levels. And I just hope you realize it's usually the opposite of what the average Joe and Joanne wants to do. And I brought in Dan to bring up the gap open because it's almost a perfect example of what the gut reaction people want to do when the market gaps open higher, let's say. And it could be anything. It could be any asset class, futures, stocks, options, Bitcoin. The very first gut reaction when something gaps open is, oh my God, I got to get in now. I don't want to lose the opportunity. And not only is that not the right thing to do, right? We showed you that it's more pragmatic to wait for the gap to fill, but then the proof is today. Even the people that know the gap filled trade, you should still wait to confirm the level and the response once the gap fills. And Dan just talked about it today because I was actually texting him earlier. I was like, look at this gap open, and it failed. It wasn't a tradable event. And by the way, all our algorithms not only confirmed that, but Dan also told people in the room, see, that was one that failed. But if you don't have this type of training and these types of tools and indicators, you're going to be gambling. Let's just face it. If you don't know how the market's going to react at a certain price, at a certain volume, you're just guessing. if you're not responding to the market with calculated decisions and real information, you're just gambling. And one of the things that Dan relies on, and he really didn't talk about it other than the volume indicators he showed, but we're the only company right now that I know of that also tracks these high frequency traders. So we're not only following the money, we're following the technology that is trading as well. And by the way, there's a few people on here that are customers. We have a lot of this automated. We actually have robots that can take out all the emotion when it comes to trading. And at the end of the day, if you think about it, emotion is really what kills your business. It's what makes you make decisions that aren't logical, that are rash, that are irresponsible. So if you are a customer, by the way, we have a special offer for you, or if you want to know more about our robots that automate a lot of your trading processes, let us know. Just write us in the chat box. You can call the office. And again, we're going to answer any questions you have at the very end. So stay tuned for that. But we do have a special offer for only people on this webinar. We also have a little bit of an offer for customers as well. You just have to talk to us about the robots, because we have a special offer for you pertaining to the robots, where a lot of this is automated. Again, you also have the ability to take a lot of the emotion, pretty much all the emotion out of trading if you're using our robots. But we thought of a program for people that are coming in, want to start a business trading, want to have a profitable enterprise, and we thought a great price point would be just under $1,000 for 3 full months with us. Now, what does that get you? Not only does it get you 3 full months in our micro trading room, all right, and the micro markets, by the way, trade at 1/10 of the regular contract, which means even less money needed, less risk when you're putting on trades. But you've got 3 full months in our live market room, where you have guidance from market open to market close, verifying every indicator that's generating the room, every buy opportunity, every sell opportunity, where to enter, where to put your stop limits for protection, where to put your profit targets. We have live support for the full 3 months. We never answer the phone with a computer during the trading day. We always answer with a live person. We have evening classes, basically small group mentorships, 3 days a week. You have that for 3 full months. And then our on-demand video library, where we have all of our video education on demand. The videos are purposely short, easy to follow. You click a green button when you have time. You watch a training video at your discretion, at your time. So you basically learn at your pace, progress at your pace, and you're provided a live support every step of the way, not only in the room, live support during the trading day in our offices, the evening classes. Heck, we'll even come in on a Saturday for you if you're busy during the week. I don't even know companies that answer the phone live during the regular business day, let alone coming on the weekend for their clients. So we are committed to your success. And at this price point, not only is this less than half of what we normally offer, $999, we normally offer our 3-month micro program at $2,500. We're also, for the first 5 people, because Dan and Patrick presented today, I thought it'd be a nice gift. For the first 5 people, if you decide to sign up today, go ahead, let us know, and we'll give you Dan and Patrick's rooms as well for those first 3 months. But we can only offer that because seats are limited in Dan and Patrick's room. Because of the attention they give their clients, they do limit the amount of people that they can help on a day-to-day basis. So the first 5 students that want Dan and Patrick room, we will add that for free. If you have any questions right now about the programs, if you want to talk about the robots for current clients, please just call into the office. Dimitri, can you put up our phone number? Anybody can call our number. We have live people answering the phone for you if you have any questions. But does anyone have any questions for Patrick, his HVAs, his reversals off HVAs, Dan, his algos, his gap open trade that he talked about? If you have any questions, please feel free to ask them now. Just go ahead and type them. You can also call the office as well, or if you have any questions about the offer we made here today.
Andrew, can I just go over something I'd like to show? I want to really dig into the emotion part, the method part, the system part, and the discipline, if you don't mind for a moment. I want to show a chart here, and this is copper. This was today. And when you're in our rooms, either Dan's room or my room, we are coaching you. You are accountable for every single thing that you do. You must send screenshots in. You must show what you're doing. If you don't show what you're doing, we can't help you. And if we can't help you, there's not a lot that can be done. You're sort of just there by yourself. And this is not what we want for people. I'm attempting to get the projector. There it is. It should pop on in a moment. This is copper. Now, we were speaking about the herd always being wrong. Copper took off this morning. And then it stopped dead. It started to sell off. Most people who really aren't trained, don't have discipline, don't have patience, would try to start jumping into things, or they look at this and say, oh my gosh, this thing is just selling off. Well, what happened is it hit a level of support. This is a high volume area, this area in orange. You're in a defined uptrend in copper. If copper were a great place to buy yesterday, it's a great place to buy today, because this is a game about human behavior. If the big money was there yesterday, they're there today. People who jumped into this thing trying to go short got murdered. And that market went straight up. This huge bar was all of these people who were selling, buying to get out of their short position because they were getting burned. Market came down again, same thing, straight up. All of those people, the big money, which is only a handful that shorted that thing on the way down, did it again. And they just do it over and over and over again. Down to up, up to down, down to up to down. Over and over and over again. We coach all of our clients on a daily basis. What to do, when to do it. It's very difficult to tell anybody when. We tell you where. We tell you, more importantly, what not to do. It's either valid or it is not. If it's not, you walk away. No one else in the business does what Dan O'Brien and I do. We are unique. If you think you've learned something somewhere else, why are you here? The reason you're here is because what you learned somewhere else did not work. We have thousands of students who we've helped become profitable, successful traders. We can help you too if you allow us. Drew, thank you very much. Greatly appreciate it.
No problem. And if anyone's looking at that chart just real quick, it's just funny. You can, again, almost see that orange area that was defined the night before in Patrick's room. And he teaches you, guys, when it hits these areas, you're going to do this. You're going to do that. And you can clearly see the market failing every time it hit that high volume area. It did not like it. It went back down. And then that final time it hit the top edge and did a hard reversal. We teach you that. And you'll know to do that the night before the market even opens the next day. And Patrick talked about this, and Dan does it as well. How would you like to have a coach that if you make a mistake or you do something well, take a screenshot. Take a screenshot of your trade, the chart, where you decided to get in, where you decided to get out, and have a professional analyze it and tell you what you did right or wrong. I mean, that alone, to me, having 3 months of a professional not only teach you how to trade the markets, how to take the emotion out of the business of trading, how to make calculated decisions, but also take the time to review your trades and tell you what you did right or wrong, to me is worth 10 times the cost of this program. And I know there's programs out there that do cost 10 times this for much, much less. So if you have an interest, again, to take advantage, this is only for the people. You would not be able to call into our office and get this price. Only people on this webinar. We have the people registered that are in this event. So this is only to the people in this room. $999 for 3 full months. All of our training, all of our materials, access to us online all day long, all of our charts and indicators, the signals that we verify in the room every single day. You're not only going to get the micro room, you're going to get the first 5 people get all 3 rooms, Dan and Patrick's room as well. So you can call into the office if you have any questions. You can type your questions here. I'll stay online here for a little bit to see if anyone has any questions. We obviously appreciate Dan and Patrick's time. I know you guys are busy. The information you provide is so valuable. And I hope people learned a lot today because, again, you'll notice a pattern here that the market, the overall market, what Dan calls the herd, a lot of people call it, small money or dumb money, really are doing the opposite of what they should be doing almost every trade they do. I mean, I see it every day that I talk to people and I hear their stories about how they got into a market at the wrong time and got burned and lost way more money than they thought they would. And more often than not, it's because they're getting in at the absolute wrong time. And it's because they don't have the right training and tools. If you have any questions, please feel free to type them here. You can call the office at 888-203-3731. The number's in the chat box. It was great having everybody here. I will stay on for a little bit. Again, thank you, Dan. Thank you, Patrick. Great training today. Great information.